Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's October 3rd. This will be our chart lesson for the day. And looking at our daily chart, another big bearish day down. We finally closed well below that support line. We bounced off the lower band here, so we're in really oversold territory down here. We could bounce out of here. We might just go sideways and relieve a little pressure and continue to go lower. What I expect is prices may come back to test that support line and see if it acts as resistance. If it doesn't, we'll probably get back above that and bounce around. If it acts as resistance, we'll probably go lower. Now, in the meantime, that doesn't mean we won't go lower first, but I would expect we'd come back and try to test this, especially being this oversold. Um, this looked like a capitulation here. Maybe we're getting one here now. I'm not going to call it that, but it looks like it. Until we see prices rally out of here, we won't know. But this is kind of what happens at the end of a big down move. You get a capitulation day that looks like this, and then suddenly prices reverse and rally out of there strongly. So we'll see what tomorrow brings. If we back up a little bit, you can see we're back down here, and there's some strong support that's come across right in here previously. And so we could hit that first and then come back and test this. It's just hard to say. And that's the thing about the daily chart. It moves at such a snail's pace. But we'll see what happens. We've definitely already gone more, further than a measured move, so this is looking really bearish. Wouldn't surprise me if we just turn down and create a big bearish trend down now. But we'll see what tomorrow brings. Anyway, let's flip over to our 2002. If we back out here, you can kind of see we were mostly sideways until about June, and we rallied there with that. When the market rallied, all the contracts probably rallied. But this one doesn't look as bullish as that other one did. You can't argue with this rally right here, but it's over, and now we've had two legs down and then some, and this thing is turned down sharply. So we'll see what happens. Let's flip over to the 2000 tick chart and look at the day, and you'll see how bearish it was, and we'll go through the trade. And you can see the large two-tiered channel. Early on, we just had a real steep downtrend with the break and a couple of legs down to a new low, and then we started rallying and looked like, hey, we could even have a range day maybe early on, but this was really bearish. So once we started going lower and made a new low, then you would kind of look for a measured move, and there's probably a larger pattern here, which I believe we had here. Notice we got a break right here, move to a new low, and then really instead of rallying, we just kind of chopped sideways. We closed a little bit higher. We kind of rallied up here into the 4 o'clock hour, actually 3 o'clock, and then it sold off again into the 4 o'clock. We opened back up at 5, which I guess is the line. So we did sell off a little bit right there just before the close, but we had we had a decent rally there last second. And that's probably just people closing out the shorts for the day traders. Because if you don't get out, you have to go to full margin, and then most people don't want to carry. Most day traders are not going to carry overnight. Unless they're swing traders, they're just not going to carry a trade overnight. It's too risky. But anyway, let's zoom in. We'll go through the trades and get through this day and wrap it up. It was a little slow getting started. 7 o'clock came over here as we're kind of bottoming out here. And there is a little two-legged move back. That signal bar is just not good enough. There's a lower high here, but by the time you can enter, you really have to wait for this bar to close. And you just can't go short there. It's a shame, but you can't. And of course, we rallied here. We don't really know that's the bottom of this range yet because we don't have our first two swings yet. So it was almost 9 o'clock before we really knew what was going on with the bigger picture. You just know we're reversing here and starting to work higher. And maybe this is going to be a range day. Maybe this is going to find some resistance and turn down and get another leg down. You don't know at this point. You just have to let it play out. but you bounce here. I just don't see any setups there I like. Uh, Finally, we come back with two legs there, and you get a second entry long with a nice signal bar right off the key entry point. Plus, you got a close outside. That's a that's a perfect setup, really. The only thing that would make it better was if the EMA was down below this too, and then it would be the perfect ideal setup. Right now, it's still a really nice setup, but we rally, we move up, then we just kind of work sideways. We get a little failed breakout there. I don't think you can take that to the short side. The way this trend's been, it probably works. You know, you might argue for that to be green. I'd skip it personally and see if you got a lower high, and that's way down here. And then you do get another lower high here, but it's right into the midline, and that midline's holding, and there's not enough room down to the low from the midline. So I don't think you can take that trade. And then finally we break on out. We do close outside the green channel here and push higher, and then we try to go lower 3 times. So when this breaks lower and fails and turns up, I like going long on the engulfing bar right there. It's a first entry. It actually was a second entry when it broke higher here. So by the time it comes up here, it's just a triple test, and it breaks lower first and turns up. Let me zoom in here. I'd go long 1 tick above. Actually, I don't always like going long above these doji type bars. So you may wait on this one to close. The only problem if you wait on it to close is right into that high. But we're likely to get a measured leg up here. And you can see we got much more than that, but there's a good chance you're going to get a measured leg up there. So I like that one. And maybe you enter that on the engulfing bar since it's the first break, and we got that nice, it looks like one leg up, a two-legged correction, so you'll probably get a measured move in there at a minimum. That's your thinking. And so I like going long there at the key entry point. And it runs up, pulls back here. This is technically a second entry long when it breaks higher, but this is your signal bar, so you can't use this one. So not really a great trade. The signal bar just doesn't qualify. But you got your close outside, and you get 2 legs up to a new high, and it turns down. Actually, you would draw your trend line here. You wouldn't have it yet. But you do have a break of this and at least 2 swings up, way away from the EMA. I like going short right there. Bounces again. You get another first entry, second entry, but it's too congested. And no signal bar is no good. And you don't get another chance to enter it. Just the bottom falls out. Then, of course, you get it rallies. You get a first entry and then a second entry. I didn't mark that one. It does confirm that trend line, but we don't have a close outside that trend line yet. And so on this one, I say wait and see if you get a lower high or maybe a failed second entry long or something like that. And this blue area was during the news, so you really didn't want to take anything in there anyway if I talked about anything in there. But you get this lower high, perfect setup. I like going short right there. We've got multiple turns down off the key entry point, and it just drops down. It's a great trade right there. It drops down pretty quickly, and then you get another 2 legs back to the EMA, and you get a break of this khaki channel here now, but your signal bar is not good enough, so you just really can't enter there. And this thing just keeps swinging lower, but there's just not any good setups. Nothing you can take. And then you get a little rally here. We're moving up. This is basically not a leg up. So I would call this first leg, pull back, second leg. So that's your second entry right there, in my opinion. Even though by the counts on your second entry indicator, it would give you a third entry. I think you could call that a second entry short with 2 legs up. Oh, we're way away from the EMA too. Only problem is you're still inside this channel, so I think it's risky. But then you get break higher here and fail and get a lower high. I like entering on the engulfing bar because it's probably going to trap people. There's plenty of room back to the EMA, and it could just keep going, which it does. So I like that entry, especially on the engulfing bar because you're likely to get a runner on it that way, and then boom, off it goes. And if you catch a runner on this trade right here, you can make some money. Let's just say you entered that on the engulfing bar. and you exited when you got a break above the first bar that closed outside, which would be this one. So that's 15 and a quarter point, $762. I mean, if you catch a trade like that, you're done for the day. Just on one contract, much less if you had a couple or more. So turns out to be a nice move down. And of course, we're bouncing here, but you don't really want to be buying in this strong a downtrend. So you just have to sit and wait. I don't see anything else here I like until you get the break, move to a new high. And, again, this is a double bottom, so first entry, second entry, and you do, if you had a draw on a channel, you get a break, move to a new high, and it turns down right off the midline there too. And so I like going short there on that second entry. And again, the bottom just falls out. It doesn't go down like the last one did, but it's still, you could make you a quick, easy 4.5 points. Comes back, sets the trend line right there, and then comes back and confirms it. But notice we get a break, move to a new high, and then it turns down. These are 2-bar matching highs, so if you wanted to go short there, you could. I would probably wait and see if you get a lower high or reversal or something. You do indeed get a lower high right there. It breaks higher first and turns down. Again, maybe you enter that since it's off the key entry point on a engulfing bar, but I usually don't like using dojis entering on a engulfing bar that's engulfing a doji. I'd rather it be a trend bar in either direction. It doesn't matter which direction. But actually, this also looks like a trend bar to the upside, which is more likely to create that trap you want. So that's another reason I like that one. Even though it's a small body, it closes almost on its very high. So it looks really bullish. And when it breaks higher and fails and instantly turns down and goes past this other one, that's, you got them trapped on that lower high, and boom, off it goes. And then we bounce again, first entry, second entry. This looks like a little spiking channel. So we're still inside that channel, and you can see how it gaps over the trend line. When you see that, you know your trend line is probably right. So I do indeed believe this to be a spiking channel because I'm confirmed by that little gap right there. Don't ask me why prices do that. They just do. I call them thin spots where the volume's real thin. But what causes them? I don't know. But you'll see that a lot, and it'll help you to confirm your trend line's in the right place. But this is a spiking channel. It is a second entry short. It is right off the key entry point. Very bearish bar. I marked it green, but honestly, I think you're better off to wait and see if you get a lower high. But if you wait, you don't get anything and it's gone again. But, there's reasons to want to be a little bit risky there. And then, of course, we drop all the way down here, and then we just find that we hit the bottom of the channel, the yellow channel, and then we start working sideways. We failed out the low side, but nothing really sets up to trade long. Same thing here. We failed out the low side. We do get a higher low right here, but I'm not crazy about it because it closes below, and so it looks like it might only be resistance. But lo and behold, it breaks higher, pulls back. You get a failure here, but that's not really where you're looking to enter a failure. Plus, we're probably headed back here, and you want to be going short. So just sit tight. And sure enough, we get a break, then a lower high, but you don't get a good signal bar on either one of those. Runs to a new low, and then you get a second entry short here, but this is your signal bar, so you have to use it, and you don't want to enter down here because your second entry triggered here. And this signal bar wouldn't qualify for a short either if you use the green one. So, you just kind of have to sit tight or try to manufacture something there, and it's going to be risky. So I think you're better off just skip it and sit tight. But it runs all the way down, prices bounce, and then you're going sideways again. Again, I don't think you want to buy in here. This one is really tempting, but it's right into that support, and you see it does bounce again. It wouldn't have stopped you out, but it probably would have went on to work before it bounced and went higher. So, again, you don't want to be going long here. You see the breakout pullback here. You can see the breakout pullback here. Anyway, it just runs up. You get a close outside new high and it turns down way away from the EMA. That one's tempting, but it's I think you need a lower high or something here. You don't get it. You really, I mean, that's a questionable if you've got a convincing close outside here because we probably could adjust that just a hair and then you don't have a close outside. So I think on this one, this looks like the first break. So you're probably going to get a retest of the high if you get the right setup. And notice you get a first entry and then it comes back, you get a second entry, but that signal bar doesn't qualify. It bounces there out of that congestion, but you get a triple test, but I don't like it because it looks like congestion. But when you get the high or low, as prices attempt to retest that high, I like going long there. And you can see it runs up, retest the high, then you get two legs back. Unfortunately, you get a second entry here, but you don't get a setup. You get a possible lower high here, but there's a little bit too much stem. Maybe that closes in the upper 1/3. I'm not convinced. Um, I mean, it looks a little neutral almost to me. But if you had a little better signal there, bar there, by all means take that. Maybe you take it anyway, because we're probably headed to this trend line at a minimum. And because we came up way short down here off the blue channel, it's possible that we get a break here. And so it might go even higher, and of course it does. There's actually a reversal there, but you're not looking for one there. And then you just chop along here. You might look at that as a triple test, but it's definitely congested. And even though the lows look like they may be down here, I believe this to be correct in the end. With this the way this whole thing goes sideways here. Um, but this is your signal bar, no setup there. Then it fails out the bottom. Still a lot of stem there. I'd skip it. But we drop down here, get another bounce. There's no setup there. High or low here, no room to get out. And it fails on the breakout, gives you a lower high and a chance to come back. Plus you've had a break here and a couple of legs up. So there's a good chance we could even reverse, especially since we're not getting back. Notice how we're not getting back to the line here like we did the last few times. And it's after a break and a new high. So I like going short there for that reason, just to ride it back to here, but probably back to here at a minimum. And it ends up going much lower. So anyway, there's another bounce here and turns down first entry. Um, I guess you could consider it a second entry when it comes by there, but it's not an engulfing bar, so you have to wait till that closes. Just no setup there. Of course, it bounces here again. You're still inside that channel. You got it's not bearish enough. Lower high here, but there's no setup there. This we didn't notice how we bounced off the top of that trend line, and we didn't get back down to this low side. So we could go outside, and notice we got about a measured move on the outside, even though we never closed outside. So that kept the trend intact. I like going short on that one, just being at the key entry point. It's a first entry, second entry, so it's a failure when it turns down there. I didn't mark this one either, but it probably should at least be green, and here's why. It breaks higher first, turns down off the key entry point, the EMA, and goes right by. I think the reason I didn't like it because there's not enough room to get out. And you can see it's close. But what I thought was the play was to go ahead and play this because it broke higher first, and that is a bullish bar, and it's probably going to trap some people and just go short one tick. But what you might do is let it break lower first and then drop a limit order in a tick or two higher, and you can see you would have got filled at 42.64. Just call it 42.65. So I like entering there, and it turns out to be a nice move down. This when it breaks higher, when it turns back down. Now, if this was a neutral bar or a doji where the bar's neutral, I'd tell you to skip that. I definitely wouldn't go short below the close there. So drops on down, tries to go higher once, tries to go higher twice. So that's a failure there, but not the place you want to take it. But you end up getting two legs back to the trend line in the EMA and a second entry short, and that's your bread and butter trade, and look at it go. It doesn't get any easier than that. And we still don't have a new low in place, so you expect prices to go lower. But they drop on down here, and they just chop sideways again. You don't want to go long. I don't see any shorts here I like. And then we break and go higher. I don't see anything that goes short or long here. You do get a break, new high. Try to go higher once, twice. So there's a failed second entry long, and then you go first entry and it turns back up and turns down. So when it breaks below that, that's a second entry short. Or actually, I take that back. Notice it goes up, turns down, and then it opens back up and goes. It actually opens up right here and breaks higher for that, and then turns down. So when it comes by that bar, it's a second entry short when this engulfing bar comes past it. We're on the wrong side of the EMA there. It is a second entry. It is a failed second entry long. Or you would be expecting a reversal because we've already had a break here and a new high. So maybe you take that trade. By the time this closes, it looks a little like a doji. You could actually enter there or here or both, depending on how much you liked it. It'd probably be pushing your luck to trade twice on a low probability or not a high probability trade. It's risky. And that's the reason we mark it green. It still kind of fits our criteria, but it's a little bit risky because of the context or the signal bar or something. That's what that means when it's green. But we finally get a break here, and you just get a first entry short, still in the channel. You can't enter that. Mixed bag day. There's really strong trend, and early on there's some pretty good trades. There's a few here late, but nothing spectacular. I mean, we had a long spout there where there's really just nothing happening, and that's what separates really good traders from average traders, is the ability to be able to sit patiently through all that down movement, through all that up movement, just waiting patiently for the best setup, and then when you see it, pouncing on it. So there it is. Another high level look at it. You get the break here around noontime or so, and then it sells off and tries to rally a little bit. But anyway, that's how I saw it today. I'm not going to beat around the bush. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.